Hey there, hey there, hey there.
Hi everyone, you are tuned into Nong and my name is Nell.
And my name is Lebu. Today we're talking about an interesting topic, right?
True.
We're always having those interesting topics. Today,
True.
the topic that we wanted to talk about is that I want to buy my first investment property.
Buying your first investment property in South Africa, it's not like buying your home. With this one, what I like about it is that there's no emotions. We're always talking about no emotions, man. So now let's get into it. We're going to highlight very important points that you need to take into consideration when buying. It's either your first or when buying property in South Africa.
So let's go deeper into this, right? So now the first one that we have is the back office, right?
True.
This is what happens beyond what you actually see, right?
True.
When you actually arrive at a property, then you see someone already bought a property, right? But now you do not know what happens behind the scenes, right?
True.
So now this is our back office. So now the first one that we had was credit. How do I use my credit, right?
True.
This is for the people that actually buying property based on credit, right? So now if I'm going to actually buy a property based on credit, I need to know where am I standing right now in terms of credit, right? So now what is my credit score? You can actually use things such as Clear Score, right? This actually runs a report on your personal portfolio and actually checks how your credit is, right? After that, you can actually go towards a bond originator for them to actually check how much would you actually qualify for in order to actually buy a particular house. Are you actually credit worthy in the bank's eyes to actually get a property under your name?
True. I mean, the second one under back office. With back office, that's where a lot of stress happens. That's where we use our mental capacity. That's where a lot of planning actually goes through.
I think that's where you actually get the jab that you're not actually ready to go into property before you actually even go into property.
What I'd like to actually highlight with the back office is that we need to actually get an accountant who's going to help us with registering the company. This might seem like it's a small thing. Why should I be stressing? Why should I be worried about registering?
Just register the thing, man.
There's so many ways that you can actually register a company, which will influence to how the business will be running, how we will be paying tax.
Yeah.
So it's very important, especially if you've got more than one person within that company. You need to get expert advice. We're always talking about expert advice. You need to get expert advice who will tell you that, guys, you know what, do not register a company under one individual, right? Because if it's the five of us, you do not want to find yourself in that situation. If you were that one person, I know he's the generous guy here. He was like, you know what, guys, it's on me. And then we registered the company under him. What can happen is that after a couple of years, even if he is the good guy, let's just assume for this case, he was the good guy and he was splitting profits equally. And then comes SARS. If he wasn't paying SARS on time, what's going to happen is that he will be left with the bill. Now, me as the bad guy, I'll be like, nah, man, I can't help, man.
And that's a situation that you don't actually want to find yourself in, right? There are other ways of actually going into property without actually using your money or your credit, right? You can actually look into something such as a JV, a joint venture. I think we talked about this in one of our videos, right? So now just to quickly give you a summary of what a joint venture is that if Neo and I were actually looking into buying a property, right, we'd actually acquire that property as one and actually use that property for business purposes, be it actually flipping it or actually renting it out, right? So now that would be a joint venture. That would be Neo and I, two separate entities coming together to actually go towards fixing this property or making money from this property.
What is very important, especially when it comes to JV, is that we need to be facilitated. Our joint venture needs to be facilitated by an attorney, or in this case, we'll call them a conveyancer. So now what will happen is that we will go to the conveyancer and me and Lebza will discuss, okay, it's 60-40 or 60-40, either way. Then we will agree with regards to a strategy, because what you do not want to happen is that, okay, let's say we go into a JV, he has his money, I have my money, we put it in that account and we've got something like 1.5, and then we see a house for 1.5. I see a house for 1.5 that I like and he sees a house for 1.5 that he likes, and then he'll tell me that it's going to work out for flip. I tell him no, it's going to work out for rental. So now you need to understand, when coming to JVs, that you are having more people. And having more people is good and bad. It's good towards credit we can scale up faster, we can come together and raise that money. However, the bad side is that we have different ideologies and we see things differently. So if he's more of playing the short term and he wants to do the flip, and I'm playing, you know what, I'm interested in rental, it is going to become a problem. So it's very important that when two or more people come together, you do understand that there are implications and there's also good pointers to it.
Just to jump in on what you were actually saying right now, right? So now what happens in a joint venture sometimes is that someone actually derails from the point that we're actually going to, right? So now this is the part whereby you actually need to stipulate everything, your expertise, what you expect from that particular joint venture, right? So now that should be actually drafted in a contract, have it signed out by everybody, so that later on when Neo says, nah man, I want to sell this thing, right? It's binded in the contract that we're going to stay in this deal for the next 5 years or 10 years, unless if we both agree to this, right? So now if we have that on contract, we can actually do that, right? We should actually wait until 5 years to actually sell this property, right? But now if Neo decides that, no, I want to sell this property, and I'm on the verge of saying, no, man, I don't want to sell this property, it becomes that conflict, right? So now if you have a contract that actually binds the both of you saying that we're going to stick to this contract for the next 5 years, then it's okay.
I think point number 2 is very important. Risk management. Risk management is something that should not be underlooked, because especially when it's the first time, you're excited, man. The adrenaline it's on its peak, and I want the property.
Let's go buy that property, man.
And I've heard about strategies. Okay, there's flipping, there's rental, and I'll be like, you know what, rental sounds good because it sounds good. We need to understand what we're putting ourselves into.
Yeah.
What am I saying by that? I need to understand all the pros that are for rental, all the cons that are against rental.
Do you mind telling us all the pros that are from rental?
Okay, for the purpose of this, for the purpose of this video, I'll just highlight on some few that are key that are key points against rental. With rental, I need to know that in comparison to capital flip, with rental, there's not going to be so much money that I will be getting, unless if it's multi-let. If it's a single let, for instance, our rent, we'll be charging rent for something like, let's say that the rent around that area is about 7,000. And then we know that the bond that we're paying back, because we took it on credit, the bond that we're paying back to the bank, it's about 3,000, and all our expenses round up to 1.5 thousand. That will be the 3,000 plus the 1.5, which is 4.5. So I'm going to deduct my income to my expenses, and then I'll be left with the net.
Yes.
I'll be left with my net. So I need to understand that when I'm playing rental, I'm playing more of the longer game, the long-term game. However, even with rental, I need to have a percentage whereby I know that I can't go less than this with regards to my return on investment.
Exactly.
So now what's going to happen is that we find the property, and then we'll be like, okay, this is a good property. It fits our criteria. How much are we going to be left with after this whole transaction? Is it something that we're going to be left with? If we're left with 500 rands after the whole transaction, once we've paid all our expenses, the question will be, is it worth it? Is it worth it? So if it's not worth it, we need to find another property or another strategy. Now, the pro for rental is that it cash flows. Once it cash flows and want to move on to the next property, and we did our back office correctly with regards to registering it correctly and getting a good accountant who will be proactive to it, it's going to become easier if we want to apply for a loan for the next home.
Exactly. And then the con for your capital flip is that it's heavy in terms of your tax. Right, because now your tax is going to be taxed based on the profit that you actually made.
Capital
right?
gain.
So now the bigger the profit, the more you're going to actually pay towards your tax, right? But now it all depends on your blueprint. Which blueprint did you actually draw towards actually attaining your main goal, right? Say for instance, in the next 10 years, I want to have 60 multi-lets, right? So now I need to reverse engineer it to where I am right now, right? So now if I don't have any money right now, right, I only have enough money to actually buy one property. It would be easier for me to actually flip. After flipping it, then actually go to your multi-let, right? Unlike actually buying one property, then waiting for me to actually get that credit again, get that actually money to actually put as a down payment, then actually going to the next one. What I can do is that I can flip properties. After flipping properties, then I'll be able to actually go to the next. And just to give you a reality check based on flip, right? I hear people saying, you can flip this, man, get 100,000, right? But now they don't actually talk about the period right? How long can it be? Because now when you're looking at property, you're thinking long term. Right. When you're looking at property, you're not thinking that, okay, I'm going to buy this house, flip it, next month I'll have that money, right? What you need to know about flipping is that registration of a house could take around 6 months to actually make it registered into your name, right? You still need to fix the property. After fixing the property, you need to sell the property again, right? So now this could take another 3 months to actually sell. So now you're looking at a 9-month period. Right. So now within that 9 months, then that's when you're actually going to make that large sum of money.
And it can happen whereby you underestimated your costs. For instance, you thought it was just cosmetics, only to find out that there are serious damages that needs to be fixed. So as a beginner, you do not want to find yourself in that situation, because let's say you were looking at let's say you're looking at 100,000 profit, only to find out that it was double, your expenses were double, so you actually run at a loss.
So right now you're asking yourself, how is this actually helping me in terms of buying my first strategy, right? This actually gives you a blueprint on how you should actually structure your way of investing into property, right? The first thing that you have to establish is that, am I in it for the long game, in terms of, am I going to rent this property out, or am I actually going to flip this property and make capital gains, thereafter rent it out? Or maybe if you like, you'd want to flip for the rest of your life. I think this important quote that someone said, I forgot who that person was, right? They were saying that in good times, everybody forgets that there were bad times, right? And then in bad times, everyone forget that there were good times. So now how is this relevant to this, right? When you're making that money, right? Getting that money, making the money dance, right? When you're still getting that money, right? You're thinking that, nah, man, I'm untouchable.
Things
Nothing
can't go
can
wrong.
happen to me. Things can't go wrong until they go wrong. And when they do go wrong, you get super conservative, and then you end up doing what? Not actually seeing the opportunities that are in the market.
So if I was like, buy when it's low every time, now things are low, am I buying? I'm actually listening to people out there speculating that things are going to be bad, things are going to be terrible. However, knowing that even through speculations, there are people that are actually going to benefit from the current situation.
We had one of the meeting today, and I was saying that, see, if your strategy was that if a storm is coming towards me, right, and I need to go to it, right, if that was your strategy when there was no storm, guess what? If there is a storm, that's what you need to do. If your storm was that you need to actually flip when times are bad, guess what you need to do right now? You need to flip. So now just make sure that that blueprint is actually drawn out. Make sure that you understand what you were saying and get that money. That was the two most important things that you need to actually consider before you actually buy your first property investment.
I mean, these two lay foundation to how your property journey will be. So you do not want to find yourself starting your journey with the left foot if you're a right-footed person, or if you're a right-hand person. Or you do not want to find yourself starting on the right foot if you are a lefty. Let's start on the right track so that we are able to scale and we're able to meet our desired goals.
Please use the things below, right? Comment below. If you haven't subscribed, click that subscribe. Leave us a like, man.
Please share the information if you find it and you can relate to it. We'd appreciate a share.
Nong,
Signing out.